Hi, my name is Steve Spencer. I'm the broker at Gateway Realty, and I don't believe I've ever seen a time when it's better to invest in real estate. Residential real estate is always a good investment, but today it seems to be like the best investment that you can make. The stock market's scary, and people stockbrokers always talk about how you can make lots of money buying stocks, and I've found that most stockbrokers get rich buying real estate. They don't make commissions from it, but they get rich that way. And bottom line is, making investments in real estate today in Solano County, we've seen properties values drop by half over the last 3 years. Before that, they'd gone up by about 200%. So you can buy real estate today at 2002 prices, and the nice thing about it is you can make that investment and draw dividends right from the very beginning on a monthly basis, as opposed to stock, which pays dividends annually. And these dividends are much larger. I've used an example of a $200,000 home. There's plenty of $200,000 homes in Solano County. They're typically 3 to 4 bedrooms and 2 bathrooms, and they'll rent for about $1,500 a month on a conservative basis. In the stock market, if you wanted to buy $200,000 worth of securities, you'd have to have $200,000 unless you're willing to buy on margin, which is very risky, and nobody's buying on margin these days. However, in real estate, if you want to purchase as an investor a $200,000 home, you can do it with $40,000. And if you place $40,000 down on a $200,000 home, you can get a 6% or better interest rate. So I use 6% as a conservative number. At 6% interest, and with today's tax rates and insurance rates, the monthly carry cost on a $200,000 home is about $1,248. A prudent investor leaves money in the property or in their investment account to cover vacancies. The highest vacancy factor that we've seen around here is about 5%. So I plugged in a 5% vacancy factor. And a prudent investor also puts money aside for reserves to do maintenance. And a good maintenance number is 3%. So adding the vacancy and reserve factor in, the total cost of home ownership on that particular investment is $1,368. On the other hand, the rent is about $1,500 a month. So there is a positive cash flow right from the beginning, and there's about a 6% net investment return on a monthly basis, which would be considered dividends. I'm sure most people who are stock market investors can tell you that it's very difficult to find any investment in the stock market that pays 6% that also has potential for increased value. And we know that we not only have potential for increased value because we've seen prices far higher than they are, and we know that they will return there. Any historic look at real estate values shows that while they go up and they go down, they never go down as far as they had gone down in a prior cycle, and they always rise further than they rose in the past cycles. So we know that not only will real estate come back to the prices that it was in 2005, but we know it'll exceed those prices. We just don't know when. So the nice part about a real estate investment is that you receive money while you're waiting for the prices to go to where you hope they will be. And at 6% return, it's actually a 9% return that works out to 6% on a net basis. You also receive tax benefits from owning real estate, which are completely absent in a stock investment. I never advise anybody to purchase an investment for the tax benefit, but it's nice to have if you can get an investment that comes with that. And basically what we've seen is about a 31-year, the IRS accepts a 31-year depreciation schedule. So on a $200,000 investment, you're going to get roughly a $4,300 a year tax write-off just for depreciation alone, or over $1,000 worth of write-off. That's income, about $3,500 worth of income that you receive per year that's tax-free from your other job. And that's something that you just don't see in a stock investment. The most beautiful thing about real estate is the leverage part of it. If you only put 20% down, you can multiply your investment returns by 5 to achieve cash-on-cash returns. And cash-on-cash returns are what stock market people, stockbrokers, use when they talk about the returns. So a 6% dividend payment on a leveraged investment at 5 to 1 works out to a net return of about 30% cash on cash. And while we said it was difficult to find a 6% return, dividend return in the stock market, it's impossible to find a 30% return in the stock market. But it's everyday practice in real estate in Solano County right now with prices where they are. So in 30% net cash on cash return, most people will bet the farm on, and in this particular case, it's not a fraudulent investment. It's not something too good to be true. It's just reality. Real estate values have plunged to the point where a renter can now buy a house for about the same price as he can rent it on a monthly basis. Why do I say that? Well, the reason is because that guards against properties going down any further. We've hit the bottom in Solano County, because when a renter can live in a home that he owns with upside potential for the same price as he can rent it, that's when renters begin to buy houses. And if all the renters start buying houses, they're certainly going to go up in value. So we're at the bottom, and it's a great time to be a real estate investor. We're seeing investors come out of the woodwork. People who had not considered buying residential real estate in the past are now buying residential real estate in Solano County because they can see that there's no place for it to go but up, and they get paid to wait while it does go up. So don't overlook Solano County when you're thinking about making your next investment.